Good morning and welcome to Bloomberg Quint, India's first digital live streaming business news service. I'm Nirav and you're watching IndianOpen. Let's go straight to the headlines. Donald Trump warns of bigger than ever war games if North Korea talks come to a stall. Aditya Birla Group and Joindre partners join hands to form a stressed assets fund in India. Sources tell Bloomberg News that it's going to have a $1 billion corpus. Reliance Infra wants to be a debt-free company in 1 year, says Anil Ambani after selling Mumbai's power business for 18,000 crores to Adani Transmission. Swapna Barman and Arpinder Singh win the 10th and the 11th gold medal for India at the ongoing Asian Games in Jakarta. Well, the good news from Indonesia continues for sure, and the good news on the markets front continues as well. Let's take a look at the trade setup for the day. Firstly, the news from around the world. For all those who are not on social media, would have missed this on the Bloomberg website as well. Donald Trump has warned of bigger than ever war games if the North Korean talks stall. I think in a series of tweets that he made it sound as if, and emphasized that these are official White House messages. He says that China hindering the North Korean negotiations due to the trade disputes, and it almost seemed like there is an issue with regards to the North Korean conversations. And remember, about 3 or 4 months ago, when the two leaders had met in Singapore, it almost seemed as if a historic deal is in the offing. Now, maybe, just maybe, that is under a bit of a cloud. Not that that deterred the markets for sure, because there were a lot of positives to come in from the US markets as well in Friday's session. But this is one big talking point, and I think this will remain a talking point for the next few days as well. So watch out for the Donald Trump Twitter handle and watch out for statements coming in from the US with regards to North Korea, because yesterday was a bit of a move away from what's something that we've been used to seeing now for a while, which is amicable talks between North Korea as well as Donald Trump. In fact, earlier in the day, he suggested there was no reason to worry, but somehow the tweets late evening seem to suggest otherwise. What happened though, the positives that I was talking about. One, Canada is on board for the North American Free Trade Agreement talks. Of course, this is again something that came in from Donald Trump, but talks with Canada to overhaul the NAFTA is going well. This is something that is that kind of buoyed sentiment in the US markets. Tech shares went up, and you saw the S&P climb up and stay above the 2900 mark, so a historic close of about 0.5%. Nasdaq was the principal driver, to be honest, because everything from Amazon to Alphabet and a few other tech shares really rallied in trade, and which is why those were the principal contributors to the S&P 500 moving up. And as a result of that, Nasdaq clocking in about 1% gains, and that by itself just buoyed sentiment despite the series of tweets by Donald Trump. So US markets ended well. Asia has a mixed start of sorts in today's session. The SGX Nifty is indicating a start which is marginally in the green. Remember, we have our own things to watch out for today in terms of the expiry, but at least the start seems to be okay. What did the markets do yesterday? They ended marginally lower. Broader markets, of course, did reasonably well compared to what the large caps did. Not that there was a big issue with the large caps, but while the Nifty 50 ended about 0.4% lower, the mid caps and the small caps selectively had fairly decent outings as well. I think most market participants that we spoke to on the countdown show yesterday as well and otherwise seem to believe that the close could be between 11,700 to 11,800 odd levels. So maybe watch out for these. Fund flows. There was a large sell number from the FI side, but there was also some selling that a couple of FIs had done on mid-cap stocks and large selling that had happened. So in part could be that number as well. DI is pumping in about 1,000 odd crores. And the last 3 days, the standout feature has been the DI buying, which has kind of been at a slightly higher level than what we've been used to. So do watch out for those numbers as well. Would be interesting to see. What's to be watched today? I think rupee on track. It's been weak consistently, and if it continues to fall, then we are by and large on track for the fall on the 7th straight month in August, and this would be the longest losing streak. My analyst Saloni tells me that this is the longest losing streak in nearly 18 years for the Indian rupee. Do watch out for this. What about stocks to watch out though in the session today at 9:15? Aditya Birla Capital. Now remember, Bloomberg News broke this at about 4:30 p.m. or 5 p.m. or thereabouts. It was there on the website as well. Officially out now that Aditya Birla Capital and Joindre partners are going to create a JV to invest as much as $1 billion in distressed assets in India. Managing distressed assets, whether by way of an asset reconstruction company or otherwise. It's really big and a profitable business. Now AB Capital entering into that fray. Let's see if it does something to the stock in the session today, though. It desperately needs something. Shemaru. It's an interesting one. It's a company that's done reasonably well in the recent past. They're going to meet Pabra investment funds. Typically, I mean, this is just a meeting really, nothing conclusive as yet, but typically when Monish Pabra's names gets associated with an investment in a company, the stocks tend to react. Let's wait and watch what comes out of this meeting. Trident, the promoter group, has been acquiring shares on August 28th. This data, this is something that I saw today. Maybe it came out yesterday evening, but about 18.5 lakh shares. Remember, Trident was very active the last couple of days. Now we know why. Should be interesting to see if there is further upside here. And a couple of brokerage notes that I thought were important. Goldman Sachs on Vedanta, they've initiated a buy with a target price of 280, which is a potential upside of 23%. Zinc price recovery. One of the key things that they believe would work is that the zinc price recovery and volume growth will drive the stock re-rating. Let's wait and watch if Vedanta reacts a bit in the session today. And JP Morgan on PNB Housing Finance, they've maintained an underweight with the target price of 1050, the potential downside of about 25%. A stock that's a darling of a few prominent HNI investors stroke portfolio managers, somehow not quite seeing the right side of JP Morgan's research team. They maintain that underweight, target price 1050. Let's wait and watch if there's a further reaction on PAB Housing. We've been talking about this the last couple of days. However, what are we going to talk about on First Word today? That's the key thing. Starting off, a high base coupled with upcoming launches may cut the pace of growth for auto sales in August. Yash takes us through the Bloomberg Quint Dealers Survey. Next up, foreign retailers want a pie of the Indian retail space, and that's clearly reflecting on stock prices. I'll just weigh in on the recent news flow and the data releases by the companies over the last few years on their operations. Puma Srivastava then joins in with the details of the joint venture inked between Aditya Birla Capital and Vade Partners. It's a large JV. Let's wait and watch what are the details of that. And then Yatin finally comes in to tell us what Reliance Infrastructure and Adani Transmission get from their latest deal. However, the first piece on First Word, a high base may have slowed down the pace of growth for auto sales this month. A Bloomberg Quint survey conducted amongst 30 dealers across the country indicates that cars and two-wheeler sales may slow down, barring a few surprises. Yash Upadhyay is here with the survey. Yash, good morning.
Good morning, Nirav. So, a couple of key trends that I'm picking up from my interaction with the dealers across the country is the fact that a high base of last year, along with the price hikes that the companies have announced in the month of August, that is likely to bear down on the auto sales. So, first up, we'll start with a high base, and we are looking at some big names over here. So, something like a Maruti Suzuki that is expected to have almost a flat month on a year-on-year basis on account of the slowdown in the passenger vehicle sales. Hero MotoCorp about a 2.5% growth, only a marginal improvement there, while Royal Enfield could see about only a 6% growth as the company recovers from the delay in announcement of its new launches. Also, remember, as I said, it's the slowdown in the passenger vehicle sales that is bearing down for Maruti Suzuki, but the other two four-wheeler makers, that is M&M and Tata Motors, that should come up as well. They are expected to do fairly well. So about a 9% growth for M&M and about an 18% growth for Tata Motors on account of the improvement in demand for the commercial vehicle segment. So that is one space which is doing well on the back of increase in volumes in the commercial vehicle segment. Going forward, there is also the two two-wheeler manufacturers, which is Bajaj Auto and TVS Motors, almost on two different lanes over there. So Bajaj Auto doing fairly better, about 18% growth. Note that it had about a relatively weak August of last year, so that low base is helping them, and also the price cut that they announced for its entry-level Platina model last month, which is helping the volumes. But for TVS Motors, about a 9% degrowth in volumes is what the dealers are telling me. Now, if let's go deep into the discussion. And as I told you, the passenger vehicle sales, they are going to be slower this time around because of the price hikes that the company took. So the increase in raw material prices, they are starting to catch up as Maruti Suzuki, Mahindra and Tata Motors all announced price hikes. About a 6,000 rupees increase for Maruti Suzuki, 30,000 rupees increase for M&M, and on an average 2% increase in prices for Tata Motors. So all in all, because of this, the passenger vehicle sales, they would be slower, which would particularly hamper Maruti Suzuki, but the other two players would do fairly better because of their exposure to commercial vehicle segment as well.
Interesting. Yeah. So, yeah, sorry. You were saying?
Yeah, so I was also talking about the two-wheeler space, and there's a fierce competition for Hero MotoCorp. Only a 2.5% growth for them, but the key thing to note over there is that the increase in competition in the entry-level segment, so that is going to affect them. The sub-125cc segment, that is seeing a lot of competition, new launches as well as price cuts, like I said, for Bajaj Auto. So that would impact them. And well, the tragic floods in Kerala, the worst that the state has witnessed in nearly a century, that would have a bearing when it comes to the other two players such as Royal Enfield and TVS Motors, who have sizable volumes coming in from the southern markets. So that's that when it comes to these players.
Interesting. So this is as far as what this could show up. But you know, Yash, the interesting bit also is that the competition is only going to heat up just before the festive season, with I believe a series of new launches coming in from across the board.
Right. So the mood in the camp is quite optimistic, as the festive season starts a little late as compared to last year. We already had the festive season started at this time last year. So going ahead, the mood is very optimistic because all of these companies have come out with a lot of new launches. So let's take a look at each one of them. Maruti has announced the refresh of their Ciaz model. It's their best performing mini sedan, the segment leader in that space, and it goes up head to head with Honda City, Hyundai Verna, and Toyota Yaris. Also, we are looking at Mahindra & Mahindra, they have said that they would be launching 3 utility vehicles before the end of 2018. Marazzo being one of them. Bookings have already started with the launch announced on September 3rd. It goes up against Maruti Ertiga and Toyota Innova. So that would be something to watch out for. It has been consistently losing market share in the UV space on account of the sub utility vehicle space seeing an increasing competition with the Brezza and Baleno. So that would be very important for them going forward. For the two-wheeler space, Hero has announced the Extreme 200R, which is priced very aggressively at about 90,000 rupees ex-showroom. That would go head-to-head with the Bajaj Pulsar and Pulsar 200NS and TVS Apache, which makes their re-entry in the premium bike segment. Also, we're looking at TVS. Now, they have introduced a new bike in the entry-level segment, the TVS Radeon 110cc. That goes up head-to-head with Hero Splendor and the Bajaj Platina. So, like I was saying, the entry-level segment, that is seeing extreme amount of competition. And lastly, well, for Royal Enfield, they have announced the Classic 350 Bullet with ABS. That is their first model in India having ABS having the ABS, which would go head to head with Bajaj Dominar. Well,
we'll watch out for all of these. Yash, thanks so much for bringing us up to speed. So if people believe that auto companies can deliver good numbers month on month, well, maybe, just maybe, this month could be a bit of a pause. Let's wait and watch if that indeed happens or no. Okay, the next piece on First Word is retail. Now, barring yesterday, we've seen almost all of the retail shares, or the shares of the retailers are flying off the shelves with rising consumer demand and the consequent surge in sales and profitability. Investors just can't get enough of these stocks. In fact, even strategic investors from across the globe are bidding for a piece of the Indian retail pie, and the exuberance is clearly showing in the stock prices. Let's first pull up the stock prices. Maybe the comparison over the last 15 days or the last 1 month, if we can get those up for the prominent retail names, you will see how well some of these counters have done. A day spurt or otherwise, but you've seen most of the retail counters flying high, be it a Shopper Stop, be it a Future Retail. Avenue Supermarts, of course, stays in a mood of its own, so that stock has done very well too. So across the board, we've seen retail counters doing rather well for themselves over the last 10 or 15 odd sessions. Now, what could be the reason for these moves to come about? One could be the recent news flow about specific companies, and let's dwell on each of these companies individually as well. I've chosen about 5 names. There could be 2 or 3 more which have done well, but let me just focus on the top 4 or 5 which have some news flow around them, or the performance has been very strong. So M&A buzz for Reliance Retail. The media reports have suggested that Alibaba is exploring a joint venture. Reliance, of course, has gone on record and saying that they do not have any deal with Alibaba in the offing. But well, that's one point which led to some bit of spurt for these companies. What is Reliance? And by the way, the fundamental performance from Reliance Retail hasn't been too bad. Look at the EBIT. I think I've chosen EBIT and EBITDA, as the case may be, for each of these companies to show that the fundamental performance for select names also have been doing well. Reliance Retail's EBIT performance, as per the company filings, from FY15 to FY18 has jumped about 5x. In FY15 is about 417 crores. The latest release numbers as of FY18 point to a number of 2,064 crores. And that shows the kind of jump that has come in for Reliance Retail. What about Future Retail? That's the other one which had an M&A buzz too. So media reports suggest that Google and Paytm may compete with Amazon for a 10% stake in Future Retail. Now, if you look at Future Retail's EBITDA numbers, those two have been doing rather well. From an FY16 number of 90 crores, they've moved up to 832 crores in FY18. And if Nomura estimates are to be believed, they could touch a number of 1,500 crores by FY20. So even the same-store sales, even if the same-store sales growth numbers were not looking all that strong in the recently released numbers, the EBITDA growth and the buzz around some bit of capital infusion by Google or Paytm or both, leading to this spurt that came into Future Retail. Aditya Birla Fashion, I think a lot of people have been caught by surprise with the kind of move that's come into this stock, because it's been, it's northwards of 200 now. It's been setting the stage on fire really with its price movement. Look at the numbers again out here. FY16, the EBITDA numbers are about 378 crores. They've moved up to 468 crores. Maybe not as strong a trajectory as a Reliance or a Future Retail, but a strong move nevertheless. Jefferies believes that by FY19 and FY20, more importantly, the EBITDA numbers could move up to almost 713 crores. That's about a 60% jump over the FY18 numbers, which is not bad. Yes, the concern remains, again, for Aditya Birla Fashion too. The same-store sales growth haven't been that positive. In fact, for the last few quarters, it's been a very muted same-store sales growth performance. But the market likes the fact that the company, after having a very lackluster period for a really long time, is now starting to show those signs of growth on the top line and the EBITDA front, and maybe that is egging the stock higher. Similarly for Trent, and I think the commentary from the management was strong too, but just look at what they've done on the EBITDA front again. FY16, EBITDA numbers of 93 crores. FY18, 171 crores. And again, I've used Jefferies' estimates for FY19 and FY20. They believe that the EBITDA numbers could inch up all the way to 306 crores. So the fundamental performance is looking okay. Noel Tata, in fact, in the recent release that came out post the numbers, mentioned that the consistent focus on own brands and growing emphasis on differentiated customer experience will sustain growth and profitability. And almost all the research reports have taken note of the confidence expressed by the management for Trent going ahead. Maybe that is something that is revving the stock up. It's been a consistent performance, I must say. Again, out here, one concern would be that the same-store sales growth has dipped, has slowed down, margins have dipped as well. But the confidence from the management egging the stock higher. Lastly, a small piece of CESC, which is Spencer Retail, after years of promise, has now started showing some performance. It's turned EBITDA positive in FY18. These numbers I have sourced from the report of Kotak Securities. But for FY15, it was a negative 73 crores, narrowed it down to 26 crores, FY17, FY18, plus about 17 crores. So those numbers for Spencer and consequently for CSE been doing well. There's a lot of talk about how at some point of time with the demerger, Spencer will get listed as a separate entity. But yeah, just showing that the performance for Spencer as well is doing well. And last but not the least, the mothership really, Avenue Supermarts, could not put a foot wrong. Look at those EBITDA numbers, FY16 to FY18. The numbers have more than doubled, 1352 crores. JP Morgan believes that FY19, FY20, the numbers could move up to 2200 crores. So on the numbers front and the delivery, you can't fault Avenue Supermarts. The concern, if any, would be, as it's always been, that the stock remains having very punchy valuations. Growth, best-in-class profitability, already priced in as per a lot of analysts, but, well, it continues to move up higher. The last thing that you just got to watch out for when it comes to these offline retailers is that the draft e-commerce policy, which was tabled on the last day of the minister moving out of power, did have a couple of points which would cost the online retailers. And if that were the case, this was about the discounts that the online retailers offer. And if there are decisions made by the government on that aspect, then that could well work to the benefit of the offline retailers as well. Conjecture maybe, and too early to speak about it maybe as well. But let's wait and watch if that's a further boost to some of these offline retailers. But for now, because of the M&A buzz predominantly, these retailers can't put a foot wrong. You could have an odd day when the stocks don't perform well, but by and large, they've done really well for themselves. Okay, the next piece, and well, I was speaking about Aditya Birla Fashion. Let's speak about Aditya Birla Capital. It's joined hands with Varde Partners to set up a $1 billion distressed assets fund. The JV will aim to invest in the corpus over the next 3 years. Now, Bhuma Srivastava of Bloomberg News joins us now with more. Bhuma, thanks so much for joining in. Now, we heard this, we saw this news on the terminal sometime late evening. Can you tell us more about what will this JV be all about?
So JV is largely about getting Varde partners in India and to jointly invest in distressed and stressed assets in Indian space, which is attracting a lot of foreign investors anyway. Varde and Aditya Birla Capital plan to look at smaller size deals. They don't want a 1 billion plus kind of big deal. They want like small bite-sized deals of about $100 million and multiple deals across sectors. So there's no sector-specific focus, but they want smaller deals which can kind of cobble together and make up good portfolio. So that's a larger idea.
Interesting. Now, I mean, would there be a particular rationale as to why is it that Aditya Birla Capital would have chosen Varde? I don't know if you have some sense around it, but any particular reason? And what could this potentially do for Aditya Birla Capital? Because I can tell you, from a stock market perspective, post getting listed, somehow it's not been able to entice investors with either the results or the delivery or the moves that they've taken.
So one thing about Varde is that it's globally known for picking up assets in a distressed space. So they do come with some bit of specialization to the table. Aditya Birla Group on their side have a lot of management bandwidth across sectors. Could be cement, could be textiles, could be IT cellular, what have you. So they are coming with management expertise, whereas the global partner is coming with a lot of money. They have about 14 billion of funds in their global portfolio. So certainly like 1 billion is a very, very small portion of it. So that kind of brings a lot of interesting stuff on the table. About the stock and what we do know is that Aditya Birla Capital already has an ARC. They might come up with an AIF as well. And in both those platforms, Varde will be partnering them. So that's where maybe they will get a fillip and maybe some excitement around the stock as well.
Okay, let's wait and watch. My last question, if you got a chance to learn from either the company sources or otherwise about whether this is an initial step, the size, and would they be looking to at some point of time expand the size as well? Any inkling about that?
As of now, not really. They just want to take it one step at a time. And we have seen the bankruptcy process is not the smoothest of ones. Yeah. Aditya Birla Group itself has learned, a few things about it through the Ultratech and Binani Cement case. So as of now, it's this collaboration, 1 billion, 3-year time frame for small assets. And I think they will just kind of see it as it comes along.
Okay, great, Bhuma. Thanks so much for putting perspective on this. And well, let's Bhuma Srivastava talking about this deal from Aditya Birla Capital. But I think as she rightly says, maybe this can bring about excitement in the stock price, maybe not. Time will tell. Let's see if the deal announced yesterday or culminated yesterday brings about some excitement for Reliance Infrastructure or Adani, because the board of Reliance Infrastructure has approved the plan to sell Mumbai Power Distribution business to Adani Transmission. The deal would provide a huge relief to the debt-ridden Adani ADAG group and mark Adani's foray into the distribution segment in Mumbai as well. Yatin Mota is standing by to tell us what the deal means to each party. Yatin, let's start with Reliance.
So, Nirav, Reliance Infra and the transaction is about the Mumbai distribution business. Now, this is basically integrated business wherein Reliance Infrastructure would be selling, their power generation business, transmission business and the distribution business. So the entire integrated business, is getting sold, from the Reliance Infra end to Adani Transmission. Of course, the entire transaction value is close to 18,800 crores. Of course, as Reliance Infrastructure was intending, and this has been made announced, that all the funds which are raised in the transaction would be going into debt reduction. Now, after receiving the consideration of 18,800 crores and the transaction closed yesterday, the balance sheet impact is that the gross debt for Reliance Infrastructure will come down to a level of 7,500 crores post deal, and the overall interest cost also for Reliance Infrastructure will fall from a level of 2,600 crores to a level of 800 crores. Of course, their credit rating also will be improving as a result of this transaction, and the interest cost, not only the cost of funds, but also the overall debt comes down for the Reliance Infrastructure entity, and that is the reason why you're looking at a sharp decline in the interest cost from 2,600 crores to 800 crores per year. Of course, yesterday, Anil Ambani also, addressed in the press conference. He said that they aim to become a debt-free company next financial year. And to support this debt-free status next year, which is the next financial year, the company is looking at two, clear things. Number one is the arbitration cases which are pending, in the court of law, because of which there are significant amount of cash flows which will be generated. And also, prior to the transaction, whichever other assets or receivables from the state electricity boards and the, the government, that also will be coming into Reliance Infrastructure, and probably that is how they intend to become debt-free. And more importantly, the press conference also focused on the Delhi distribution business, which will be driving the earnings growth moving forward. This is only the Mumbai business that they have sold. The Delhi business, which is much larger, stays with the Anil Ambani group. And probably the deleveraging is something that the markets were watching out for closely. Let's see how really the stock of Reliance Infra pans out, given the fact that they defaulted on NCDs, and the credit rating went for a toss. And now really how the things shape up for Reliance Infra is something important we'll watch out for.
What would it mean for Adani?
So, Neeraj, we have seen Adani Transmission. They have been, one of those private players in the transmission space which have been doing well. Of course, this sector was monopolized by Power Grid. And now, Adani from transmission is getting into distribution. So they were already present in power generation, the group. The company was present in transmission assets. And now we have the company which is entered into the distribution business. So distribution is basically getting, the transmission line converted into end-to-end, consumer points. Of course, they get access to nearly 30 lakh consumers in Mumbai and give them cross opportunities for selling various things. They also, will be transferring the entire business into a fully owned subsidiary called Adani Electricity. And more importantly, if you look at the revenue CAGR for the last 3 financial years, it has been close to 24%, 47% in growth in EBITDA, what they have seen. Of course, the leverage is something important, one needs to watch out for, because after acquisition, nearly 8,500 crores of debt will be received from the balance sheet of Reliance Infrastructure. They already had a debt of 10,000 crores, so the debt figure moves up to 18,500 crores plus the cost of acquisition. So, the debt will be closer to 25,000 crores according to the initial estimates. And more importantly, if you look at the risks, because Adani is not present in the distribution space, probably that expertise and getting into the retail segment could be cumbersome initially. The debt would more than double for Adani Transmission, and nearly 32% of their debt is US dollar denominated, and given the fact that the rupee is weakening, probably that will have some bit of impact as per accounting standards. But we need to wait and watch as to how really does the fundraising plan moves up for Adani Transmission, given the fact that they have acquired a very large asset. Would they be diluting equity? Would they be looking at raising dollar-denominated debt as they have been doing it? Because this is a stable cash flow business. You can project your earnings and revenues quite smartly in the transmission and distribution business. So this is something that we'll be watching out for on the leverage front and on the equity raising front. In the last 3-4 days, the shares have appreciated 30% on the hope that there will be no equity dilution, and you could have some low-cost debt which could flow in. But this is all speculation as of now, and very important to see how really do they get the returns from this particular asset.
Let's wait and watch. Yatin, thanks for putting that into perspective. 2 key names to watch out for in the session today as well. But that's all that we have on First Word for the day today. Lots more lined up on Indian Open. The ball is in government's court. It has 15 days to decide whether to direct RBI to exempt the power sector from the stricter NPA norms. We speak with the Power Secretary Ajay Kumar Bhalla. Muthoot Capital is in a sweet spot to tap the growing two-wheeler lending market in India, says Samviti Capital's Prabhakar Kudwa at the Alpha Ideas 2020 conference. Today we discuss growth plans and opportunities with Madhu Alexiouse of Muthoot Capital. But after this break, full tilt towards the day's trade.
Dreamers. They're everywhere. You've met them, been to school with them, worked with them. They didn't seem different. Yet she's the one who surprised everybody. His crazy idea actually worked.
They are no different. They are you when you take a chance on yourself.
These are the dreamers who found a way to run the engine of the world. These are the entrepreneurs. There is no formula. There is no right place, right time. There are no overnight successes.
But there is toil, there is preparation, and there is tenacity.
There is no end of the road, no obstacle large enough. There's just the vision and the heart that won't give up.
Because Agons of business never stop.
Agons of business never stop. Only on Bloomberg Quint.
Anything and everything about your investments. We're just a touch away. Monday to Friday at 12:30 p.m. only on Bloomberg Quint.
Welcome back. You're watching Indian Open right here on Bloomberg Quint. Let's quickly take a look at what the Asian market setup looks like at this point. So you're tracking some modest gains that have come into the Nikkei, just a smidge higher by 0.1%, but the Shanghai and the Hang trading in the red by almost 0.5% piece. Tracking the rise in the US equity markets. Remember, we did see the S&P 500 closing above the 2,900 mark on the back of better than expected reading of the US economy. So you are seeing a spread of green across the board for the US markets. For SGX Nifty right here that we're going to be tracking for market opening on the Nifty, we've actually seen just a 17-point bump up, 11,721 for the SGX Nifty. But today is the expiry day for the August series. We've got a lot of cues coming in from the futures and options segment as well. Rollovers to track. Navneet joins in with that. Navneet, good morning.
Hey Devina, good morning. Well, it is an important day and hence you can expect some bit of volatility to be seen. In terms of rollovers yesterday, we definitely saw a pickup when it came to the Nifty rollovers, which stood at somewhere about 43%. Pull up the Bank Nifty rollovers as well. They too increased in yesterday's session, almost about 44. But remember, today is the main day of monitoring the rollovers, how they stack up vis-a-vis the 3-month average that we've seen. But overall, there was some profit booking which definitely came in yesterday's session. In fact, if you look at the Nifty PCR, this was the 8-year high. Finally, it cooled off to levels of about 1.78, and that was on back of some bit of unwinding seen for a couple of put strikes. So let's just pull up the open interest strikes of the Nifty and see which were the strikes where maximum unwinding was seen. The red bars are your put strikes. So here was the level where maximum unwinding was seen on the 11,700. I think the key question today will be, where will the expiry take place? Yesterday, the spot Nifty closed below the level of 11,700. I think it should be somewhere about 100 points range between 11,650 to about 11,750. Well, in terms of institutions, no major data coming in, but definitely there was some shorts build up on index futures. And on the put side, there was action seen. If you look at the index options data from FIs, there was addition seen on both the put long as well as the put short side. And the real picture once again will be seen from tomorrow's data, how they start the series for the September one. But in terms of stock futures, definitely keep an eye on Jain Irrigation. The stock was up almost 4%. It's also out of the F&O ban. Let's see if there is any sort of additional buying which can come on back of that queue. And also one of the top gainers in Nifty was UPL. So fresh long positions were seen here. Rollovers look pretty good for this one, 77%. And Indigo saw a lot of selling pressure in yesterday's trade. The stock was down almost 5.5%. And even if you look at the rollovers for Indigo, did appear on the higher side. Back to you guys.
Very much for that. So keeping a close eye on the rollover figures as we head towards the last half an hour of trade. We've got Avinash Gorakshakar. He's the head of research at Joindre Capital Services. He's joining us right now. Avinash, thanks very much and good morning. Let's start off with the leaders of the pack that we've been seeing, but yesterday took a breather. So the likes of Reliance, which has been contributing to the gains of the index so far, yesterday was one of the biggest losers in trade, and a UPL for that matter, which stacked up right at the top.
My guess is I think we have seen a very strong outperformance for the Reliance counter ever since the July AGM. Our sense is that this seems to be a little bit of profit booking, and I think considering the fact that the company is confident of maintaining its GRMs, especially on its core refining business, and most importantly with the kind of market share expansion in the geo business, I would not be surprised that we could see a little bit of buying maybe at lower levels, and clearly I would definitely look at a stronger second half for Reliance. As far as UPL is concerned, I think the markets are building in some concerns as far as their recent acquisition goes. I think overall initially the expectation is that probably some sort of interest costs and some sort of leverage on the balance sheet could get a little more higher, and that would definitely depress the PBT and the bottom line margins. But overall, I think clearly from the business scenario side, I think both the US, Europe as well as the domestic business seems to be growing at a moderately strong kind of pace. So all said and done, these are typical moves of frontline companies which saw a minor bit of kind of profit booking. Fundamentally, Devina, I don't think there's anything to worry, and we could see a stronger earnings kind of traction in FY19.
Okay. Another name that probably will gain a lot of traction in today's session, or at least will be at the center of attention, is going to be a stock like Aditya Birla Capital. What did you make out of the news, of them starting a pool of money of about $1 billion with Varde partners to invest in stressed assets here?
No, I think the markets was keenly awaiting for this formal announcement, and I think looking at the fact that the stock has been beaten down quite badly ever since it got listed, our sense is that somebody who's looking at a time horizon of at least the next 12 to 18 odd months, there could be a good risk reward kind of opportunity here. Looking at the kind of listing HDFC AMC made, clearly Aditya Birla Capital is number 3 in mutual funds. They have a life insurance business, they have a housing finance business. So in future the markets are obviously building in value for each of these businesses, which obviously could unlock a lot of value for the company. So I think this news announcement is definitely positive. I think you will see probably some kind of earnings traction only in the next year. But overall, I think looking at the kind of price at the current moment, I think it could definitely give us decent risk reward, for a long-term investor.
Avinash, what did you make of this Reliance Infra Adani transmission now deal getting consummated?
Yeah.
We all knew about this deal happening. Yeah. Now we have the details out as well, the ambitions from Anil Ambani about making it a debt-free company. Does it bring anything new to the table for investors to get excited for either of the counters?
See, I think clearly as far as Adani transmission is concerned, the stock has actually moved quite fast. In the last few days, weeks, I think it's moved up by almost 20 to 25%. My sense is with this news, we will probably see some sort of profit booking, because in the near term, clearly the kind of asset they have purchased, they have actually funded it largely by debt, and the balance sheet gets a little more leverage in the short term. So clearly there could be a little bit of profit booking because now the news is out. As far as Reliance Infra is concerned, I think the market should obviously look at how execution happens as far as the debt reduction in Reliance Infra is concerned, and most importantly how the order book now moves up, because clearly in terms of order execution and in terms of margins, debt was clearly an issue for Reliance Infra in the past. Overall, I think it's going to be positive for both the companies, but in the short term, I would believe that Reliance Infra could strike a better chord, considering the fact that a large part of its debt is now going to be repaid. So clearly in the short term, Adani transmission could attract a little bit of profit booking. All the longer term, the kind of assets they purchase, they actually get closer to the customer. So probably, Adani transmission could be a good bet at lower levels, and Reliance Infra, I think one can just hold on. I wouldn't be surprised that the markets would actually wait for some more commentary as to what is the kind of next growth, trigger for the company.
Last 7 days for Adani transmission has been really strong, almost a 40% bump up. But yesterday, those remained slightly more muted. Lots more stocks to talk about. Let's take a look at what are the stocks in the news today, and some brokerage calls on stocks like Pidilite and an ITC. We've got Shraddha and Agam both joining in right now. Shraddha, I'm going to start off with you for some stocks in news.
So, Devina, first on my list is Greaves Cotton. They have acquired a 67% stake in the electric vehicles company for 77 crores, and then they also have an option to pick up additional stake for another 75 crores. So that's one name to keep an eye out for. You have an ET report which says that Amazon is in early talks with Spencer's Retail to pick up a minority stake. Now, Spencer's is CESC's food and grocery retail chain, so that's another stock to keep an an eye out for. PVR is said to be leading the race to acquire Wave Cinemas. The deal is expected to value Wave Cinemas at about 450 crores. That's a ET report. Announcement, however, expected only by the year end, but keep an eye out for PVR as well. Shimaru Entertainment will be meeting Monish Pabrai Investment Funds and MK Global Financial Services today, so that's definitely a stock to keep an eye out for. Wellspun Enterprises promoter has acquired 25 lakh shares over August 27 to 28. That's a 1.7% stake. And Trident promoter, Trident Group, has picked up 18.5 lakh shares on 28th August. That's a 0.4% stake. So again, possibly these two stocks will react on the back of promoters adding to their stake.
All right, Sheth, thanks very much. Agam, I believe there's Pidilite and ITC.
Right, Devina, so we did have some analysts go and meet the management of Pidilite, and there is positive sentiment building on the back of the discussions that the analysts have had with the management. So we do have Citi, which has maintained or remained neutral on the stock with a target of around 1216. However, through the management meeting, the takeaway is that the company is prioritizing growth over margins at this point in time. That said, the company has still guided for a 20 to 24% margins range, and this is something which is better than what the company has produced over the last few years. And that said, the company is going to manage to retain the raw material costs advantage, and over the next 6 months is the crucial period where one may be able to gauge the kind of volumes that we can expect from Pidilite going ahead. And coming down to Bank of America Merrill Lynch on ITC, well, they maintain a buy with a price target of 360, and according to Bank of America Merrill Lynch, their channel checks suggest a 3 to 4% volumes growth for ITC. Do remember, volumes growth for ITC over the previous few quarters has been absolutely flat, sometimes partially negative, but not too much to speak for. 3 to 4% growth for the second quarter would be a big benefit. Now, when it comes to your classic miles and Goldflake Kings, that is something which has seen competitive pressures. However, it's the switch variants which are actually starting to see a robust growth, and the FMCG business, of course, is holding on and dealing with competition from Britannia and Nestle very well, and that is something that Bank of America Merrill Lynch is also positive on. Hence, a buy rating and a price target of 360, Devina.
All right, guys. Thanks very much for that, Avinash. I want to pick up Pidilite from what Agam spoke about. So the margin guidance remains positive. Volume outlook also remains positive. Do you see the stock reacting?
I think clearly, post GST, the company has done remarkably well, and I think in terms of their pricing strategy, they've always been price leaders in their respective segment, especially the adhesive market. Our sense is that, despite the fact that the stock enjoys premium valuations, one could definitely see a stronger earnings kind of growth number for FY19 and FY20. And hopefully, as long as the company remains debt-free and generates a healthy ROE as well as ROC, we would believe that any dip actually should be used as an opportunity to accumulate the stock. This is not a trading stock, largely a fundamental kind of stock which actually has delivered very strong returns over the last, say, 2 to 3 years. So clearly, any dip or any weakness should be used as an opportunity, and even at the current levels one can hold on.
What about Trident? Do you track this one?
I think it makes terry towels, if I'm not wrong. Terry towels and paper. Some news flow, I think Nirav, yesterday the promoters bought some stocks.
Okay.
So I think clearly, the stock has been beaten down quite badly, and I think markets will definitely look at what kind of earnings numbers, the company will post, because the last quarter was slightly, down in terms of margins. Clearly, the market is expecting that probably the earnings growth could actually resume, because unless that happens, the promoter buying the stock will not actually excite the markets. I would prefer to wait and watch for at least some more earning numbers.
Okay. Any thoughts fundamentally on whether it makes sense for somebody to buy into a JSW Steel afresh?
I think yes, Niraj, looking at the kind
levels,
of
at these valuations.
Yeah, I think Niraj, if somebody is looking at the next, say, 12 to 15 odd months, I would still advocate getting into JSW Steel, considering the fact that now the earnings traction is really in a high growth kind of trajectory, and hopefully if steel prices remain firm, I would not be surprised that you could see a very stronger second half for FY19 and even FY20. So hopefully, I think after a long period of sluggishness for the stock, I would believe that we could see a bigger kind of re-rating here. But yes, clearly in terms of the risk reward, one would have to give in a slightly longer term time horizon, because the stock has moved up quite fast in the recent past.
Anything else within the metals pack that you feel, I mean, keeping in mind what's been happening to global commodity prices?
I think stocks like Vedanta have been beaten down quite badly. So I would believe that somebody who wants to take a call on the metal pack, both the ferrous, non-ferrous, could definitely look at Vedanta, because clearly, barring the kind of Tamil Nadu issue, we believe that numbers for the third and the fourth quarter for FY19 are going to be pretty stable. And as long as metal prices continue to be strong, I would not be surprised that considering that they also have the oil business, we could see a decent earnings kind of growth trajectory. Hopefully the Tamil Nadu issue gets sorted out. You could see a stronger re-rating happening here.
All right, just stay on with us, Avinash. We'll just come back to you. Time to get in our technical experts now with their views on the index and a few stocks that you can trade on. We've got Sameet, Chauhan joining in, and Aditya, Agarwala, who's here with us with their views. I'm going to come to you, Sameet, first on the index.
Well, hi, morning. We have been enjoying this strong rally that we've already seen over the past 3 to 4 weeks. Ever since we witnessed a breakout from previous hurdles of 10,800, and there has been no stopping. Yes, we have been witnessing gravity-defying moves, and first milestone was somewhere around 11,500. So we have already achieved that particular thing. We have surpassed that, and we are now heading towards its next milestone. So if we have to take directional view, recently any dip was a good buying opportunity according to us, and that strategy has played out well. So positionally, we don't see any major obstacle as such before 11,900. So that remains our immediate target. Yes, yesterday we did see some kind of profit booking from high level, and that is quite possible. The kind of rally we have seen in the recent past, which was steep in nature. But if we have to take any bet on the index, we'll stay with the flow. 11,650 according to us would act as a very strong support. Yes, yesterday there was a strong writing seen in 11,750. So for the day we might see this resistance around 11,750. But overall we expect Nifty to head higher. So our strategy would be to buy 11,640 would be the stop loss. Immediate target 11,750. And eventually we expect Nifty to head towards 11,850, 11,900.
Aditya, good morning. What's the index strategy for the day today?
So for the day, I would slightly be on the bearish side, looking at the candlestick patterns that the index made yesterday. So yesterday, two things important to notice was it failed to cross previous day's high, and it closed below previous day's low. So that is the first sign of profit booking or weakness, you can name it. So for the day, I would be slightly bearish on the index just for the day, considering that today is the expiry day. So I would short below 11,670 to 11,675 for a target of 11,600 to 11,550. Keep a stop close to about 11,730 to about 11,740.
Okay, so some bearishness on the index in the session today, as per Aditya. Sameet, what are the specific recommendations that you would make on the stock side in today's session?
See, we have been closely tracking mid-cap index since last 3 weeks. Ever since we had an anticipation that the entire mid-cap index has bottomed out, and from here on we could see decent opportunities within this index. Raymond is the one stock that has been one of the underperforming stocks, but looking at past couple of weeks price action, it appears that around 800 the stock has already formed a strong base, 800, 750, and now it's on the way up. So we expect this stock to head higher. Yes, the stock has been consolidating. The kind of momentum we have been expecting, that is still missing, but soon we expect Raymond to head higher. Immediate target would be around 895. It can be bought with a stop loss of 794. Apart from this, Century Textiles, we have been recommending the stock since last couple of weeks, but the stock has been consolidating, and finally yesterday we saw that breakout, the much awaited breakout from its hurdles of 950, 960. And if I just look at the volume activity, the volume activity was quite significant. So we expect Century Textile to continue its northward move. Immediate target to watch out for would be around 998. It can be bought with a stop loss of 938.
All right, those are some calls from Sameet. Aditya, do you have some stock recommendations?
Yes, of course. So the metal back did perform extremely well in trade yesterday. So I picked up a metal stock for a buy recommendation, that's Jindal Steel. Looking at a target of 225 to about 234 here, keep a stop at 211. Stock looks extremely good on the charts. It's almost on the verge of a breakout from an inverted head and shoulder, which is a bullish pattern. The neckline is close to about 218 to about 219. So the moment stock starts to trade above 218, you can see a spike up in the stock, which can take it all the way to 225 to 234. So a buy call on Jindal Steel. A sell call on TV18 broadcast. Stock has been witnessing corrections, and yesterday it's broken down from a bearish flag pattern, so that's showing signs of further weakness in the stock. So I will go short in the stock for targets of 44 to about 42, keep a stop at 49 here.
Interesting. TV18 in the thick of things has been an actively traded stock for the last 2-3 days as well, as see come up on the charts a number of times. Sameet, just a quick thought. Don't recollect if you've spoken about JSW already or no, but if you haven't, JSW Steel set the stage on fire yesterday. What are the levels that you're watching out for?
See, honestly, around on 24th August, there was a decisive breakout. The stock has been consolidating of late, but within metal space, if you see its price action over the past couple of years, this stock has been clearly outperforming its peer counters, and there was a breakout after a long consolidation on 24th of August, and we had recommended for a small target. We were not expecting that sharp move. We were expecting 370, 375, and the stock has already crossed those levels quite convincingly. Looking at the charts, there has been no stopping, but yes, the kind of momentum that we have seen, I'm not sure whether will continue with the similar kind of momentum. So stock might consolidate a bit, but any dip from current level probably toward 380, 375. I'm not sure whether this dip would come or not, but if it comes, then that would be a good buying opportunity. Considering the broader degree chart, this stock can head higher. It has already entered an uncharted territory, so 420, 430, these are the next levels to watch out for.
All right, that's JSW Steel. The stock was up about 9% in yesterday's session. But remember, one of the biggest intraday moves that we've seen in some time for JSW Steel, 399 on the stock. Well, it's onto our special segment, Bloomberg Edge, where Jayesh Khilani tells us about a pattern that the Bloomberg terminal has thrown up on a stock or a trend. Jayesh, what's the stock on your radar today?
Morning, Devina. It's in fact the Nifty index that the Bloomberg terminal has thrown up. That's because there is a rare 3-candle pattern formation that has happened as of yesterday's close, and that's called as the evening star. But first, let's have a look at how the evening star actually works and what are the conditions that you have to keep in mind. Well, it's an early indication of a bearish reversal in an uptrend, so that is important to keep in mind. The 3 candles that I was telling you what you have to watch out for. So the first candle has to be a long white or a bullish candle, while the second candle generally tends to gap up but has a very short body. And lastly, the third candle has to be a bearish candle or a long filled black candle that we have. So these are the 3 consecutive candles that you have to watch out for, and it's very rare because in the last 2 years only thrice such a pattern has been formed. So that's the chart of the Nifty in the last 3 months, and the last 3 candles that you can see, which are highlighted in the red color with the annotation ES written on top of that, that is the evening star. So the first candle is the bullish candle that we had 3 days back. Then we had a gap up opening, but the body was very short, and yesterday we had a bearish candle which retraced all the way down and breached this particular bullish candle as well. So this is the evening star formation that happens, and that is it's formed at the top of an uptrend. So early indication that there could be some bit of bearishness that can come about for the market.
How accurate is this evening star reading?
So Devina, like I was telling you, it's a very rare formation. Last couple of years, only thrice this pattern has been formed, and each of the instances has resulted in a Nifty correction of about 1 to 3% before the Nifty actually moves higher.
All right. Jayesh, thanks very much for that. So that's a pattern that you need to watch out for. Let's take a look at some of the other stocks that could probably see some bit of traction in trade today. PVR is a stock that over the last 1 month has given you a 21% bump up. Now, after acquiring stake in SPI Cinemas, there is talks that they are in the race to acquire another, Wave Cinemas, but timeline obviously is not known out here, and how much, whether it's at the end of this year or probably in FY19. Avinash, PVR?
I think clearly, there's a lot of consolidation happening in the multiplex industry, and I think this acquisition will further, deepen its geographical presence, Divina. I think clearly you could see, obviously, some sort of traction on the kind of ticket sales and on the revenues, probably in the next, say, 3 to 6 months. But clearly, in terms of the asset acquisition strategy, PBR has been quite aggressive, and I think, obviously, with a larger geographical base and with now GST in order, one would definitely look at this move as a longer term kind of positive for the company. Maybe in the short term, we could not see any major kind of earnings impact, but clearly in the longer term post FY19, one could definitely see some sort of incremental contribution coming in from this acquisition.
Interesting. Avinash, what's the stock that you before we get to recommendations, a couple of other stocks that I want to talk about. PNB Housing Finance. Now it's a bit of an enigma, right? I remember last year the Sohn conference, Ramdev recommending that the 1 lakh crore story. Vasant Maheshwari and few other eminent investors have been very bullish. Exactly the last 1 year period, the stock has been underperforming while other NBFCs have done rather well. Now, is it the curse of being in the housing finance space which has hit almost all of these companies? Or do you believe that there could be an upside here? I must tell you, JP Morgan has come out with a note today. Their target is about 1,050. They believe there is a case for a potential downside of about 25%.
Niraj, I think clearly if you look at the positioning of PNB Housing, I think it still remains to be quite robust in terms of numbers. Asset qualities remains to be quite strong. The clear issue is, I think, Kerala, which has got a large stake, hopefully if this stake is not sold at a significant premium, then in the near term, the stock could definitely underperform. Our sense is that, if at all the stock does come down, to 1,050 or corrects significantly, I would definitely go and buy it, because this is definitely a very strong secular business, considering the fact that now PNB, Punjab National Bank actually requires cash urgently. It's obviously taking out most of its assets and actually generating cash. So I would believe that, in the short term, the stock could underperform, but in the longer term, this could be a good entry point, because clearly in the affordable housing space and in the kind of, growth numbers, especially the loan book growth numbers shown in the first quarter, PNB Housing definitely deserves a good re-rating, but this may not happen immediately till the time you get a new buyer and a new management team, which actually, gives a further directional push to the company.
Interesting. What also did well yesterday, remember, Bajaj Finance, knocking on the doors of 3,000, so could be an interesting one to monitor today. We spoke about JSW Steel. The other one that did really well was JSW Holdings. Naturally so, went up about 8%. And Intellect Design Arena had a fabulous outing yesterday, up about 12%. Aditya, out of the blue, Intellect Design shot up in trade. Anything on the charts?
Definitely, it's very strong on the charts. Look at the volume. Yesterday's volume were massive, and it's followed up after a volume which we'd seen a couple of weeks back. So every time we see a green candle, there's massive volume on the stock. Extremely bullish here. Probably I'm looking at a target of 350 and higher if you hold on for a period of 6 months.
You would buy it today?
Yeah, definitely.
Sameet, mid-cap IT, what's the... if you indeed look at mid-cap IT stocks, what's that one name that stands out for you?
See, to be honestly, Niraj, if we just look at the mid-cap IT counters over the past couple of months, they have been consolidating, and it is quite obvious. Before that, if you see, since last 1.5 years, they have been clearly outperforming, be it Mindtree, be it Exaware, be it KPIT. So I believe that some kind of time-wise consolidation, time-wise correction was quite overdue, and this is what we have been witnessing since last couple of months. So I would expect continuation of that particular phase. But within this space, if I have to keep a close eye on any particular stock, then KPIT Tech we are certainly liking. Yes, the overall structure is quite strong. The stock has been consolidating now since last 2 to 3 weeks. Once the stock surpasses 300, I could see a short-term breakout in this counter. In that case, the stock can again resume its high degree uptrend. First target to watch out for in that case would be somewhere around 312, 315. But overall, we expect mid-cap IT to undergo some kind of time-wise correction.
Okay. Just one stock, after a stellar run in the last 3 months, even for that matter, year to date. Suven Life yesterday, came down about 7% odd. Do you see more profit taking on the stock?
Yes, possibly there could be some more profit taking. A correction to levels of 263 to about 260 is possible on the cards. Having said that, definitely stock had witnessed quite a significant up move from levels of 225 to all the way to 290. So this is just a little bit of profit taking that's happening in the stock. Close to about 260 should act as a good support.
Okay.
Well, interesting. So do watch out for Suven Life. Yesterday the stock was down 6%. It had an investors or a Suven Life day or something like that yesterday, wherein they met a bunch of analysts and spoke about how the prospects ahead could be. Avinash, I don't know if you got a chance to read up Suven Life at all, but a quick 20 seconds.
A patent also.
Yeah, that too.
I think this seems to be a little bit of profit booking because the US pipeline is considerably quite healthy, and I think the markets are probably now factoring in what kind of value upside comes in from these new molecules, which would be obviously be commercially released in the next financial year. I think in the short term the stock could possibly correct, considering that it's run up pretty fast, but overall I think it remains to be a very strong player as far as the molecule development concerned. And in the mid cap space, Niraj, it's been one of those stocks which has actually spent a lot of money on R&D and actually has US as its main market. So I would believe that somebody who has the stock should not get worried. Clearly we could see a little bit of weakness in the short term, but FY20 should be a much better year.
All right, that's on Suven Life. We've got about 10 seconds left to go for market pre-open. Asian market snapshot there. Very muted performance right now. For SGX, you've got a 16-point bump up at 11,720. Market pre-open. And you've got the Nifty opening lower by 1%, while the Sensex is divergent. But obviously these will come together and you'll find a midpoint there for the Nifty as well as the Sensex, since just trading at 39,000 right now. Coming to the big movers on the index, Naishi Motors is up 2.5%, Yes Bank's up 1.7%, Vedanta is up 1.3%, you've got a Cipla which is at 649, and Infosys is up 1%, GAIL has moved up 0.75%, Maruti Suzuki is moved up at 9,430, L&T 1360 on the stock. Coal India does well. Yesterday was one of the losers, but today seems to be, at least pre-open, seems to indicate a positive open. Z is up 0.5%. UPL, the big gain of yesterday, carries on its positive trend today. Tata Motors, Dr. Reddy's, Reliance Industries, after giving a loss in yesterday's session, one of the worst performers, is bounced back into the green. Losers, Bharti Infratel down 2%, Ultratech Cement down about 1.3%, HCL Technologies, HPCL, Tech Mahindra, all in the red, and some of the oil marketing companies as well. BPCL is down 0.25%, ONGC is down 1/3%.
Yeah, I think this unnatural or this high uptick in TTK Prestige might correct itself. Let's wait and watch. Greaves Cotton, well, up about 7% on that piece of news, so that's doing okay. They've made an acquisition and that stock could well have a good start in the trading day today. Let's see if Hathway Cables carries on from where it left off. Seems like it'll start off on a positive note. Not too many losers. Adani Transmission right now showing a downtick, but it's a very difficult stock to trade, so be careful before you trade this one. 3 or 4 names that you should watch out for. The currency meanwhile is open at 70.69. It's a really sharp downtick on the rupee at the start of the trading day itself. The ticker rate notwithstanding, 70.64. That's the it's a downtick bay on the absolute level, not necessarily on a comparative level. And the bond yields should come up on your screen as well. 7.93. They are hardening as well. Okay, just before we move any further, Avinash, Gorakshakar, final comments from you, and let me ask you about your top stock call for the day today.
I think within the mid-cap space, we like Mahindra CIE. I think clearly, you mentioned levels for the rupee today. I would believe that a weaker rupee is definitely going to benefit most of the component companies, and Mahindra CIE has a large exposure on both the US and the European markets. I would believe that not only earnings traction in the first quarter was very strong, but even the domestic business is growing very strongly. So I would believe that clearly this stock should definitely do well, not only considering the rupee factor in their favor, but considering the fact that they supply to large OEMs both in the Europe and the US market. In the domestic markets also, they are largely present in the engine component space. So with a strong earnings traction and with a kind of large order book which is to be executed over the next 12-18 months, I would believe, Niraj, this could be a stock which could possibly give easily about 20-25% returns over the next, say, 12-15 months.
Okay, Avinash, we'll leave it at that. Many thanks for joining in today and giving us that perspective. Really appreciate your time. Okay, get in Sameet Sarkar with the top brokerage calls of the day as well. Sameet, good morning.
Good morning, Nirav. On the big brokerage calls for the day, first we have is Goldman Sachs on Vedanta. Now, the brokerage has initiated coverage on the stock with a buy rating and a target price of 280, which suggests a potential upside of nearly 23%. Vedanta, which is one of the largest diversified miners globally, has attractive commodity exposure to zinc and oil, says the brokerage. Now, Goldman is expecting the zinc prices to recover in short term, while oil prices is expected to remain at an elevated level. Now, going forward, strong volume growth across major segments, that is zinc, oil and aluminium, would drive the earnings for the company, says the brokerage. But though capital expenditure for Vedanta is expected to remain at an elevated level, the brokerage is expecting a strong dividend yield of 5% till financial year 2020. Lastly, recovery in zinc prices and volume growth would re-rate the stock, says the brokerage. Second we have is UBS on Axis Bank. Now, the brokerage has maintained its buy rating on the stock but has raised the target price to 765 from 675, which suggests a potential upside of nearly 17%. Now, according to the brokerage, Axis Bank is well pleased to gain incremental market share of deposits in the retail and in the SME segment. Now, for Axis Bank, currently only close to 4% of the total loan book is vulnerable, which should also be resolved in financial year 2019, according to the brokerage. Now, UBS is expecting a re-rating in the share prices of Axis as visibility of asset quality improvement is seen in the second half of financial year 2019 and growth picks up for the bank. Lastly, it is expecting a 19% loan growth over FY19 to FY21 for Axis, which would drive a 46% EPS growth for the bank going forward.
All right, at 660 Axis Bank. Sameet, thanks very much. Aditya, one last question before I let you go. Anything within the banking pack, or is there a trade that's possible on the Bank Nifty itself?
So Bank Nifty is more into consolidation. It's not showing signs of any weakness as of yet, as is seen in the Nifty. I would probably wait for Bank Nifty to just break out of the resistance that it's been facing of late. So it's more of a consolidation. No trade at the current levels. Probably a trade above 28,150. Sorry, 28,350 will trigger an up move in the Bank Nifty. So I will go long above 28,350. Look at a target of 28,500 in the Bank Nifty.
Okay, Aditya, we'll let it be. Thank you so much for joining us today.
Pleasure.
Really appreciate your
so
time.
Much.
Well, those are some specific recommendations that came in at 8:50, and of course, view on the banking space. As well. With the pre-open rates about to settle in, we'll likely start off on a flattish note. The question mark only is, how does the setup look like for the near term, keeping in mind the global volatility, the elections, and all that's happening in the US front as well. Nirav, Sheth, Head of Institutional Equities at SBI Cap Securities, with us on the show. Nirav, so good having you. Thanks so much for taking the time out.
Thank you for taking me in.
Very volatile, not just the markets, but the commentary around the geopolitical situation. Suddenly, Donald Trump says that the talks with North Korea are not going as planned. China is interfering, and we already have the trade spat with China out there too. What do you think could be a problem for these markets? Would it be global in nature and something around the trade spat or the geopolitical tension, or is it something completely different?
See, I think it depends on how you want to read it, right? So far, a lot of things has been rhetoric. Please appreciate the fact that you've got midterm elections coming in November, and it's very crucial for him to retain majority of one of the house, or else he ends up being a lame duck president, which is what happened in the second term of President Obama. So it's exactly like what happens in the Indian diaspora in terms of when you come close to elections, you'll have a lot of noise around communalism and stuff like that. In terms of what is actually done on the ground, there are very limited things that can impact the earnings. Markets will eventually respond to either a delta change in earnings or delta change in interest rates. Now, all that I think reasonably seems to be on track. The only thing that I'm slightly perturbed about is what happens to the currencies, and that is also because of reflexivity. It's not that your fundamentals have deteriorated significantly, but the fact that people are worried about, I mean, look at what happened yesterday, right? It was entirely because Turkey took a hit, Argentina peso took a hit, and then, you had my rupee losing about 0.6, 0.7%. Nothing has changed so much as the fundamentals on the ground. So I think we'll live with this kind of volatility, but I think the earnings trajectory is reasonably okay. Look at the Q1 results. You've seen a minor downgrade in earnings, but you're still on track to do about 20% growth in earnings. What's my view on the market? I don't see any upside on the Nifty. Our bet always has been on the churn within the Nifty, and I think from the last time we discussed, I can again go out, thumb the table and say that corporate banks will double in 18 months. That is played out, and I think that's the beginning of a trend.
You know, I was going to probably have a follow-up question on that as to whether, you know, what will be the bigger triggers? What happens within the economy, macroeconomic growth, your earnings growth, or whether precedence will be given to things like what Donald Trump says?
So whatever Trump will say, see, a macro will have a very strong relation to how the markets will evolve in the next 1 or 3 months.
Because
so
US on the macro front is doing fine, the economy is doing fine.
Economy is doing fine. That also means that if US does really well, if dollar really remains strong, then that is not a very happy situation for emerging market currencies, right? So there is a counterbalancing impact that comes over there. But if you look at the 6 months, then the driver of the market always will be earnings. And I think the two things, for example, when you look at the macroeconomic growth rate, if I remember the numbers right, my profit to GDP ratio is at almost all-time low. And at looking at FY18, it's about 3.6. My long-term average is 6%. Even if I don't have a great pickup in the economy, I think my earnings are going to rebound and come to a normalized level. That is enough for us to get excited about the markets. And like I said, our job is to try and figure out which large sectors are going to lead this rebound in earnings. That is what is going to keep the markets. And likewise, you know, get out of stuff where things could normalize in a reverse way. Consumer companies, for example.
Oh, interesting. So, Nirav, the conversation then stems around whether you believe it will be the bottom line performance of the companies within India which will eventually drive performance, because until now 2018 has been a year not necessarily only of the earnings growth but the P multiple expansions for all the well-performing companies, right? The top 15-20 companies are not necessarily only a factor of earnings growth, it's also the multiple expansion.
Right.
What happens in the next 6 months?
The same thing. So I'm saying is that multiples expand in anticipation of earnings growth rate, right? So that is exactly what is going to happen.
So do you see that will happen, that instead of the top 20 companies which have been doing well, now will be the turn of the remaining 200 out of the BSE 200 which show the performance and show earnings to have some bit of mean reversion to the earlier multiples that they enjoyed?
Absolutely. So I think there's no doubt that your recovery will get broader. To some extent, it has started playing out. Mid-cap index have started coming back. Small-cap index is still sort of floating around. Small cap companies or index tends to have a negative correlation to rupee, right? So once you are done with this depreciation of the rupee, once rupee stabilizes, you're going to see even the small cap companies coming back. If you look at the P's of the market, then it gives a very distorting picture, right? Sure. So the question is that Reliance is up whatever 40% in the current years. You don't have the same kind of delta in earnings in Reliance. But is the intrinsic value of Reliance higher than what it was? Streets has got other view. I think it's going to be a phenomenal story over the next several years. I'm not getting into valuations right now. Can Reliance get into an NBFC? Yes. Can Reliance have a Paytm sort of a structure? Yes. Can Reliance have a triple play? Yes. Appreciate the fact that there is not a single company in the world which has put a $30 billion in a greenfield network in telecom ever and succeeded. Right? So that is, we are talking about a different zone.
Okay, so let's talk about this in detail. We just 3 minutes to market open. We'll come back and talk about this in detail as well. Minutes away from market open. So first, let's tell you all that you need to know to stay ahead in trade. Then we'll have a conversation with Sameet Chavan about the here and now as well. But all you need to know, starting off with Reliance Infra, the board approved the sale of its Mumbai power business to Adani Transmission. Chairman Anil Ambani expects the company to be debt-free in the next year.
India's stressed assets find more interest. AB Capital and Varde Partners have formed a joint venture to invest in the same. Varde Partners will acquire 50% stake in Aditya Birla ARC.
Some takeaways from the Pidilite management. They plan to focus on delivering double-digit volume growth by strengthening position in the core adhesives portfolio.
In bulk deals, Morgan Stanley sold 8 lakh shares in Camel & Fine. The 0.66% stake was sold for 62.69 rupees per share.
In key brokerage calls, Goldman Sachs initiates coverage on Vedanta with a price target of 280 rupees. That's a potential upside of 23%.
And ITC's cigarette business may see a 3 to 4% volume growth. That's according to early channel checks conducted by Bank of America Merrill Lynch.
Well, interesting. Not too many stocks in news moving around, but we are likely to have a start which is very, very flat. Just at the broader end of the spectrum, we'll see a couple of stocks moving around in trade. Sameet Chavan, Pfizer showing a downtick of 5%, likely to start off 3-4 percentage points lower. The stock's been rather strong the last few days. Is there a trade here?
See, obviously, it is not at current level. The stock has run up quite a lot, from the levels of 25,600 in a span of 3 weeks. We've already witnessed a rally of more than 30%. And obviously in last couple of days the stock has come off a bit, and today it is likely to open down with a 5%. So we expect a continuation of this corrective move. Yes, the stock can extend this losses further, wherein 3250, 3200 levels can be retested. Around those levels, yes, there could be a buy. According to, if I just look at the broader picture, it still looks quite positive. And if the stock, gives a decent retracement probably toward 3200, that can become a good buying opportunity. Not at current level, on depths toward 3200.
Another stock that seems to be active today is Greaves Cotton. There is some news about the board approving acquiring 67% stake in Ampere Vehicles. The stock's at 159 in pre-open, 8.6% higher. Anything on the charts there?
No, the stock has been, have been witnessing some kind of, consolidation of late. Today we are seeing, strong opening in this particular counter. If it stays above 160, this move is likely to extend further towards its all-time highs, which is around 170. Not sure, considering the risk to reward ratio, I'm not sure whether to, go long at current level or not. But those who have bought it at low level, they should certainly stay put. 170, 172 can be retested quite soon.
All right, and quickly your top call, you've got about 10 seconds or so.
I would go with Radico. Certainly look good. This has been outperforming, and yesterday there was a decisive breakout from this particular counter. So I would expect continuation of this move. The stock is clearly hitting higher. 508 is the level to watch out for. Can be bought with a stop loss of 461.
Well, Sameet, always good having you. Thank you so much for taking the time out today and talking to us. And watch out for Radico Khaitan. That's Sameet Chavan's top call for the day today. Well, here's how the markets are starting off. Marginally in the green, yes, marginally in the green, but actually very flat, to be honest. But I mean, don't get deterred by the red or be buoyed by the green. It's a very flat start today. Doubt that the mid caps and the small caps might be doing something dramatically different. So yeah, a flat start in the session today for these as well. Well, let's get the heat map. I don't know how many stocks will be moving around too much. Yeah, we don't have a gainer or a loser, which is over 1%. Okay, now maybe HPCL slightly more than 1%, but it's a very flat day for almost all the key stocks on the Nifty as well. Even Stevens on the market breadth, so equal number of advances and declines in the first 1 minute of trade. Vedanta marginally higher. Well, could it be because of just the trend that some of these base metal companies are having? There is a brokerage note as well today on Vedanta with some upsides of 23%. UPL marginally higher in trade. ITC slightly higher in trade. Can't spot a Reliance amongst the top 10 movers. Remember, had a slightly off day yesterday. Maybe it's on the list of losers. Yes, down about 0.5% for Reliance. But by and large, what I'm trying to say is that, save for the oil marketing companies and the 3 of them in the top 4 losers, we don't have too many trends that are getting formed on the index in today's session at the start. Remember, it's expiry day, but not too much happening on the index. So let's focus on specific stocks. And before I hand it over to Devina, just 2 or 3 newsmakers or trend makers that I want to spot at the start of the day today. Firstly, JP Morgan comes out and downgrades PNB Housing Finance, potential downsides of 25%. The stock starts off about 1.5% lower. Remember, we were talking about this stock the last couple of days. What does it offer to potential suitors as well? But stock starts off about 1.5% lower. What about a couple of other pockets? Stocks in news and yesterday's gainers. Firstly, yesterday's gainers, JSW Steel and JSW Holdings, after a blockbuster move yesterday, start off on a slightly cool note. Let's see if there is more in store or not. But remember, a big move had happened in trade yesterday on very high volumes, I might add. What about stocks in news? And let's see how these are reacting. Adani Transmission, well, sees some gravity needed to really had a blockbuster run. Reliance Infra marginally higher in trade today. I think the one that's making a good move is Greaves Cotton, 7.5% higher. You will hear from the management at about 9:50, 10 a.m. on our social media platform, any which ways, as to what does this acquisition do for Greaves Cotton. But it's starting off on a good note. Devina, what are you spotting?
Well, it seems like PSU banks are having a party in today's session after yesterday as well. We've got stocks like Dena Bank, which is up about 7% in the session. IOB has moved up 6.5%. You've got UCO Bank, which is up 5.5%. A Vijaya Bank, which is up 4%. So the entire pocket, including an Allahabad Bank, which is up about 1.6%. So a lot of interest there. Greaves Cotton, you already highlighted, is up 7%. You've got the likes of Chambal Fertilizer up 2%. Suven Life yesterday was down 7%. Today is recovered a bit, so about 2% higher. We've got Aban Offshore, which is trading higher by 1.5%. Sugar Pocket interest continues to build up. The likes of Bajaj Hindustan, which is up about 1.1%. You've got a McLeod Russell from the T space, which is doing okay. HCC, which is up 1.4%. A V-Guard, Zensar Technologies, up about 1% odd. Amongst some of the other stocks, the Deepak Fertilizer up 1/3%. GM Financial, which is up 0.5%. And Sterlite Technologies, which is gaining ground by 1/3% in trade this morning.
Well, interesting trends to all of these. Anyways, back to our conversation with Nirav, Sheth. And Nirav, so we discussed the broad construct. Just a word though on the currency as well. You mentioned how the currency moves are a bit of a concern. The rupee, I mean, if you take on account a 4-year trajectory, this is probably standard inflation or deflation as the case may be, and therefore the reaction thereof. But do you perceive more weakness here?
I would not, unless oil does something which is really funny and goes to $100, or the perception of oil going to $100 can create some sort of a panic. That also could mean that, there could be a spike towards 72, 73 and will come back. I think the biggest difference that we should note is that for the first time in the last 4 years, you've got an RBI solo mandate which is controlling inflation. Eventually, the currency will be guided by the inflation differentials between what India has got, what the rest of the world has got. We are very comfortable over there, right? Even today, we are talking about headline inflation, which is 4.2%. Yes, so you'll have, right now, it is less about the fundamentals impacting the currency, it's more about the flows impacting the currency, right? Which is selling in the bonds market, not too much, including the equity market, stuff like that. I don't think that, and you've got decent enough foreign exchange reserves, so I don't think that we are anywhere close to where we should be panicking. It's a part of a global trend. We cannot escape that. That's a reality. I think we should be broadly done. Another 2 or 3% maximum, what is likely to my knowledge.
You highlighted consumption as a theme that you're liking right now. So
no, I said that I'm willing to thumb the table and say that bonds will outperform the consumer stocks.
No, and corporate banks, yeah.
Corporate banks, yes. Very bullish on corporate banks and very bearish on the consumer companies because they're trading at some 60 times and they lose 30% from here at some point of time.
But just a pure take on the valuations or the business as well, because there are a few which are now saying that volume growth is likely to pick up and you will see that interest that's building up back, even though valuations are this stretched. I mean, majority of them have said that it's okay to have these valuations unless and until the internal growth still remains.
So that's what I call recency bias, right? So, for example, if you look at the earnings growth from FY10 to FY14, the revenue growth was 20%, volume growth was 0. Why? Because CPI inflation was running at 12 or 13%, right? If you look at the last 4 years, the revenue growth is about 8%, the earnings growth is about 9%, right? Despite that, your P's have gone from 35 to 59. Now, it's one way to look at it is that valuations, when they are in the median range, let's say we are trading at 30, 35, there's an element of doubt. Are they rich? Are they cheap? Is growth being discounted enough? 10 is cheap, 70 is expensive, period. Why? Because you got a fair amount of precision which you can estimate the growth in free cash flows for consumer companies. Consumer companies cannot grow at 15%. At the end of the day, a soap or a detergent growth is determined by a population growth rate, increase in per capita consumption, extending distribution reach. That is all to it. So it is not a Google, it is not a Paytm where there's a network effect and you can monopolize future profits, and therefore I can say that, okay, why is Paytm worth $10 billion? Yeah. It is not that. These are very stable and you can, like I said, you can estimate the growth in free cash flows. At 70p, you are almost looking at 12% growth in perpetuity. I'm willing to write it cannot happen.
But, from 35 levels, it's been graduating up to 70. So people would have come in at a 45p, at a 55p, saying it's already expensive, so why should I enter? But the stocks have done well. They have given you that leverage.
Yeah, so if you want to look at the chart and you want to buy, be my guest. It's like, Sun Pharma, people assume that Tara is going to at 85% margins. It happened for 2 years, and therefore to extrapolate those earnings for the next 5 years, and the stock is down 50% from the top, and you're struggling now, right? So my job, and I can be wrong, for all you know that, it can grow at 12% in perpetuity. That is not the bet I'm willing to take. I think that last 5, 7, 8 years have been grounded by this huge move towards quality. I almost call it lazy investments, that I don't care about the valuations. It's a great company, great ROC, I'll buy it at whatever price. It will blow up at some point of time.
Well, 2000 was IT, 2008 was infrastructure, I hope you're not saying 2018 is about consumers in that vein.
I would rather put it still quality. For example, I've argued about this. Look at Bajaj Finance, right? $30 billion. Yeah, exactly. So it's a great company, but you know, you can't be trading at 8 times book value and then you try and focus what the growth in book value will be over the next 6-7 years.
Why not, Nirav? I mean, I'm just trying to think. I'm playing the devil's advocate here. Growth Finance for the longest time, of course, the book is way lower than what a Bajaj Finance book would be, or the madness in the stock is way lower than that. But Growth Finance has perpetually traded northwards of 10 times book, right? They're not taking in, they don't need more capital in order to grow at the rate which they are growing. Bajaj Finance, I mean, except for 1 or 2 dilutions, hasn't really shown that propensity to really need this large amount of capital to do the growth that it is doing.
No, so there's a difference. Growth Finance has never come back because it's a 28% ROE company growing at 25%, so you don't need capital in perpetuity.
ROE?
This is about 18%, and they dilute, and 18%, and the fact of the matter is that, see, let's say, for example, you are doing consumer durables. Consumer durables is a 70,000 crore market. The book runs out in a year. So you can do a 24-25% ROE, right? But then you're getting into mortgages, right? Because that is 40% of the retail market.
Sure.
Mobiles, it tends to run out in a year's time frame. So, and the fact is that there is no great competitive advantage. Right now, anyone who has got head on the shoulders will make money. If someone funds me, if I create a good team, I think you can create a decent NBFC business because the underlying growth rate in credit is 18%, right? So that's a tailwind in the sector. I'm keeping the PSUs out because they don't have capital. So I'm saying head on the shoulders, you know, most guys, sensible guys will do right thing because that is now textile company. Can you do something over there? Very difficult, right? Because the tailwinds are not supporting it. So that is it. Aadhaar and you know, the fact that you got what is this called? The you've got this
UIDAI,
all these kind of things. So you can get this identity. The ecosystem is very, very strong, and therefore it's become less riskier for you to try and underwrite the loans. So you'll have these 5-6 years where serious market cap can be created.
What is the growth potential for you according, you know, is there a better play on a mid-cap IT stock versus a large-cap IT stock at the current juncture?
So you'll always have few ideas where you're going to make money. And now let us look at the last 20 years, from 1992 to 2080, 25, 30 years. 97% of the market cap is within the top 6 stocks.
Yeah.
So I mean, saying for any reasonable guy, if you want to take a bet, it is going to be large cap stocks because that is where the wealth has been created. Like, and so there's a difference. That is how the large caps make money in software. In pharma, for example, you would have made a lot of money by being in mid cap stocks. But I don't think that I'll take a long-term bet on software companies in mid cap.
But do you see it changing a bit in terms of, you know, play on whether, because most of the IT companies have seen a lot of growth from the US. Do you see some risk being attached to that, considering all the changes that are happening there?
So I think that they have preempted those changes, which is largely more local hiring and stuff like that, that increases to some extent the cost base. But beyond that, I don't think this is such a big issue. The problem and challenges for the software sector will be you don't have any productivity increases in dollar terms, and therefore you are implicitly dependent on rupee depreciation to maintain your margins. And obviously this will be a good year, which is what the stocks have done well, because what rupee has done at some other time it is going to come back to haunt you, and there'll be problems. So it is essentially a currency play, and one way to look at it is that you should just look at the chart of bond yields and the software index. There'll be a perfect correlation. So it's a risk of trade. You get worried about India, you go and buy software.
Hey, that's interesting. Never quite seen that. Okay. The last time that we spoke, you gave your call, a table thumping call, as you said, on corporate banks. It's played out well thus far. The question is the low hanging fruit out of the way now?
So valuations to some extent, they were extremely cheap. They have come back, but I think that the story is yet to begin. So yeah, absolutely, because I'm saying that is how it works, right? So you've been bogged down by credit losses, so you try and assume some sort of normalization. But when you look at the upcycle, the credit costs are significantly lower in the upcycle, right? People are still modeling about an average. You are still not modeling a pickup in credit growth rates and stuff like that. Hypothetically, I mean, one of the biggest leading indicators of growth is profit itself. right? It's like, for example, if Axis today is not making the profits, is provision for losses, you lose all the animal spirits that you need to say that I'll write slightly some bit of riskier loan growth. That will change as you move in the next two or three quarters. Yeah, so I think that from those levels, the stocks are up about 25–30%. Can they double in the next 18 months from here? I think they are on track to do that.
But versus that, you know, you weren't talking about PSUs earlier, but of late, I mean, with the big ones coming and front-loading provisions, saying that they're trying to clean up their books in a big way so that the future in terms of the visibility of earnings is much more clear. You think that's paving, I mean, giving the right signals out?
Yeah, so I think that some of the veteran PSUs are also going to be a part of this story, right? In terms of credit growth coming back, in terms of credit cost normalizations, and earnings come back very, very strongly. And that is where you should be, right? So I don't want to get into those all other the mid-tier PSU banks because they're capital constrained and stuff like that, and you don't even know when they'll get diluted because they need a capital infusion from the government. Yeah, so the story is true even for the larger cap PSU banks and the corporate banks like Axis, ICICI.
Okay. Nirav, so good chatting with you as always. Thanks so much for taking the time out and coming to the studios.
Thank you.
And look forward to having you more often here.
Sure, thank you.
Great. Okay. So, well, the going's good as per Nirav Sheth. Maybe not too many upsides on the Nifty, but bottom-up stock-specific stories will continue to do well, tracking earnings. The market's absolutely flat right now. The Nifty Bank on the day of expiry down about 0.5%. Take a break. Come back. Couple of conversations. Firstly with Muthoot Capital on what's the way ahead, and then a conversation with Mr. Ashishkumar Bhalla, the Power Secretary.
Dreamers. They're everywhere. You've met them, been to school with them, worked with them. They didn't seem different. Yet she's the one who surprised everybody. His crazy idea actually worked.
They are no different. They are you. When you take a chance on yourself.
These are the dreamers who found a way to run the engine of the world. These are the entrepreneurs. There is no formula. There is no right place, right time. There are no overnight successes.
But there is toil, there is preparation, and there is tenacity.
There is no end of the road, no obstacle large enough. There's just the vision and the heart that won't give up.
Because Agons of business never stop.
Agons of business never stop. Only on Bloomberg Quint.
This is a show which gets you a complete wrap of all the stocks that are buzzing in trade.
Everyone's a price taker, not a price maker out here. There are better opportunities in the marketplace.
The return ratios will improve, margins will improve. What are you seeing? Valuations are extremely expensive.
It would take 100 years of profits to really pay off the entire debt.
Not all good businesses are good investments.
Good return on equity could be expected.
And I think that is sustained.
Their numbers, etc., were pretty sluggish.
How much longer they can sustain, I'm not too sure.
It has never been the scenario in any of the stocks.
It's an avoid for him at this point of time.
I wouldn't write it off in such a hurry.
We are getting into more complex chemistry.
Join me as I navigate the hottest stocks and help you pick the right stock at the right time.
Welcome back. You're with us on Indian Open. It's the first company on Indian Open today in the corporate corner. It's the only pure play two-wheeler finance company and was one company highlighted at the Alpha Ideas 2020 event where Bloomberg Quint was an exclusive media partner. Muthoot Capital stands to gain a lot from the recent pickup in the scooter and bike sales as well. The question mark about the growth idea would only be what's happened in Kerala and how does that impact the company. Joining us from Chennai to talk about this is Madhu Alexiouse. He's the Chief Operating Officer of Muthoot Capital. Madhu, good having you. Thanks so much for joining in. There are two parts that I want to have this conversation in. One would be the long-term trajectory. Two would be the near-term concerns that the market would have with regards to the Kerala situation. Now, I guess let's start off with the Kerala situation. How bad or how not so bad is the situation for you? One, on the collections front, two, on the different districts that get impacted, because I reckon your overall exposure to Kerala would be to the tune of about 900 crores.
Good morning, Niraj. I think let's begin this discussion with a positive note on how the two-wheeler industry is looking right now. Last year, the two-wheeler sales were around 2 crore approximately, all India total sales, of which about 35% of the total sales gets funded by finance companies. This year, first 4 months, we have seen a very robust growth in two-wheeler sales. The growth is about 15% plus. And the volume is about 75 lakhs. And while we close H1, we expect this to be about 1.1 crore. So which means that for the year, what we were thinking that the sale would be about 2.25 crore, we are very much there. H2 is the time when the festive season starts and the sales pick up. The H1 itself had been a great growth booster for two-wheeler finance. We had been growing consistently as a strategic direction. Our strategy was to grow non-south areas. Our non-south growth this year, first 4 months, had been 100%. On south business, we have grown by 40%. And overall, we are at around 30%, which means that we are outgrowing the industry by almost double. Our distribution and the market opportunity that had been there, we've been able to balance that. So overall, very positive on this year and coming couple of years as far as two-wheeler financing goes. Coming to Kerala floods, let me give you a picture about our loan book that we have across Kerala. The most hit two districts, there our exposure is about 8% of our overall Kerala books. So it is translating to about 2 to 3% of our overall book across, total book of the company. In terms of, if you look at the other way, the vintage piece, if you take into account, most of the cases, like about 68% of the cases that we have funded in Kerala are within 1 year tenure, which means that almost 68% of our portfolio is covered through comprehensive insurance, because insurance is mandatory when we do the financing business. So we feel that a substantial portion of our portfolio is covered through insurance. And balance, let's say about 32% that is left out, which is in the 2 year, because the tenor in two-wheeler loans are very small, like 2 years and 2.5 years. So 32% is where about 50 to 60% insurance happens. So that is also safe. And besides that, in the second year tenor, the principal outstanding is so low that customer would generally feel to repay that and take his NOC rather than spoiling his repayment track record, given the given the the online tracking that happens through CIBIL and many other credit bureaus. So what we overall, what our thought about Kerala is that we are seeing about 2 to 3% of our book which is impacted, but these things need to be seen from a different perspective as far as Muthoot Papachan Group is concerned. We have a unique blend of distribution, especially in South and especially in Kerala. We are spread out in this state through about 850 plus branches of our flagship company, that is Muthoot Fincorp Limited.
Sure.
We have our own in-house collection team, which is unique in two-wheeler industry. In two-wheeler, generally the collection happens through agencies, but in Kerala we have a huge team which is on our rolls who does the collections. Given this blend, it's very important that how we positively engage with the customer, and customer had been dealing us generation after generation. We are a century-old company in this state, and we strongly Madhu, feel that yeah.
So Madhu, I'm getting a sense that you are a lot more optimistic about this Kerala issue not being as large an issue. Are we to assume that there is a base percentage figure that you have in mind which could be the worst possible outcome of this calamity for you as a company? Would it be restricted to the tune of 3%? And if indeed you engage with the customer as well as you're saying, and if in the insurance bit plays out as you're saying as well, then the number could not even be 3% of your overall loan book. Would that be an assessment?
I would say we are actually right now, our assessment is that it is around 3% of a book which is impacted, which is something which we need to address. But it is not that hunky-dory also that we may like to think like that. But it would be about 30 to 45 days that customer bounce back and start repaying, back to their normal repayment cycle. Currently, we are collecting about 50 to 60% of collections which normally used to happen in Kerala. That is a voluntary, how customers are coming to our offices and paying. So that is a good sign, and we hope that this would improve further. When I say 30 to 45 days impact, it also means that there would be impact on NPAs. We are seeing about 10 to 12 crore enhancement of NPAs by next 30-45 days, and maybe around November it would start reducing. I'm talking about Kerala per se. So overall, we are seeing that our NPAs would go up by maximum 12 to 13 crores in a couple of months. And November or December is the time when we think that it would start coming back. It is very important to mention here that last couple of years our NPAs had been drastically coming down, and with the growing book of 50%, we have ensured that NPA on absolute value terms also remained stable. So we still have a huge scope in terms of the industry standards. We'd been much better as far as NPAs and collections are concerned. So it is a matter of 30-45 days that we feel that the impact would play, and we should be able to come out by November.
Okay, Madhu, I'll play a bit of a rapid fire here. A couple of questions and just quick answers before we get to the long-term trajectory, because I do want to talk about that. One of the beliefs was that the QIP capital raised for growth may have to be used up for credit costs post Kerala, and therefore there will be a need for further dilution very soon. You would rule out that possibility?
No, I don't think so. In terms of our QIP that we have raised by till 2020, I don't think so. We would need to really do anything else. At 2020 is the time when we said that we'll hit a book of around 3,700 crore two-wheeler standalone business. Of course, we have other products to launch as we go by this financial year. So it is still 2020. I don't think so. We need to look back and think about anything as far as capital raise is concerned.
Okay. Now, I would guess that, and I'm guessing that's the extent of the damage. You explained the Kerala bit very well. I don't think there could be a view that you can have on the possibility of a loan waiver by the local government, so I won't really get into that. I just thought that's an overhang that probably exists in the minds of certain people. Madhu, just one last question on Kerala before we move to the long-term trajectory. What's the loan given default in this business, and does this change pre-event and post-event?
I don't think so. Loan given default would have impact because I have said that the tenor is not more than 2.5 years. And ultimately, what is left out, if at all, is at risk is hardly anything. So I don't think so. Our assessment is it is not going to impact, and we are standing by our long-term guidance in terms of even this financial year we are committed to the guidance that we had given earlier.
Okay, so are we to assume that not just till FY20 but maybe beyond that, because I'm sure you as the heads of business are probably not thinking only after 2 years but the next 5 years. You are a relatively smaller player within the overall scheme of things, a relatively smaller part of the overall Muthoot group as well. Would a 20-25% CAGR on growth on the book for the next 5 years be a distinct possibility, Madhu?
Growth is not a issue for Muthoot Capital because Muthoot Capital has a huge headroom as the NBFC. Within the group, Muthoot Capital focuses on asset-based funding. We are right now only in two-wheeler business, and in two-wheeler also I explained in the starting of this discussion that we want to become all India player, and all India means non-South business. About 70% of two-wheeler sales happens outside South, and we need to really tap that, and a lot of initiatives on digital that is happening, a lot of initiatives on technology that is happening. With zero infrastructure costs, we are able to reach nook and corner of the country. So we have a huge headroom to tap two-wheeler business across the country, and then we have a lot of other asset finance business that we have not yet touched. We are piloting used car right now, followed by consumer durable is something which we'll like to do this particular year. And then, these two products coming into play next couple of years, I think we have a huge scope to grow next 5 years. And asset-based finance is a huge opportunity across the product lines that is available. And we, as a vision, we feel that the products that we launch would be what is meant for the common man, and what is his next aspirational need, and that is where we are focused when we say used cars, when we say consumer durables. Right. At the same time, we are very clear that any product that we launch, it should be something which is ROE 18% plus, and that is our focus. And ultimately, what we return to the shareholders is something which we are very sensitive about. Sure. So these are two things which would drive us as we go forward, and growth is something which is great opportunity for us, and which we are not going to miss.
Okay, which is awesome. Just one last question: what will accompany this growth? And mention on two ratios as you see them, maybe 3 years out. One is whether you can bring down your gross NPAs from where they are. I know they are at an average level of what the worst NPAs and the best NPAs in the book in the country are, but can you bring them down further 5 years out? Two, can your ROE sustain above 20-22% 5 years out?
In terms of NPA, currently we have said we'll maintain below 5%. We are right now we are at 4.2 approximately. It is something which will be around 4 on a long term, and that is a commitment that we have. The collection model, the unique blend that I told you across the country, that we have a network of flagship companies, branches, our own teams, the kind of engagement that we do with the retail customers, that would really help us to be better in the industry. I think we'll be best in the industry. So 4% is around what we say long term. ROE, I said that any product that we launch, anything that we do, if it is 18% plus, is something which would make us attractive. So long term, 5 years, it's difficult to tell to you right now, but I'm saying about 2020 is something which is clearly sustainable and will deliver that. So in terms of our guidance, we are very much intact, and we are very much focused on that.
Interesting. Madhu, thank you so much for taking the time out and throwing some light here. I think a few of investors particularly were worried about what the outcome could be. You've given ample evidence to believe that there might not be so much of a worry. All the best for the recoveries as well, Madhu. Thanks so much for taking the time out.
Thank you, Neeraj. Thank you very much.
Well, that's Muthoot Capital, sounding a lot more confident about the Kerala situation and the impact on business. The next conversation, well, a special one. It's the country's oldest stock exchange, but that doesn't mean it is not moving with the times. Bombay Stock Exchange has gone ahead and launched a slew of new products as it looks to garner more volumes on its platform. Not just that, but a lot of other initiatives to talk about. Joining me in the studio is Ashishkumar Chauhan, the MD and CEO of Bombay Stock Exchange. Ashish, so good having you. Thanks so much for taking the time out and being with us. Actually, just before we get to the business questions, Ashish, a couple of news bits that I wanted to get out of the way, not just from a BSE stock perspective, but from the climate perspective. I believe you and National Stock Exchange are set to have written to the market regulator seeking to bridge the variance in stock prices for the companies which are under the IBC process. Can you talk about it?
See, basically, what happens is when a price discovery for the first time happens on two different exchanges, there is a possibility that the price discovered on both exchanges could be at variance with each other. And that used to happen in even IPOs, that on the first day, a price could be totally different. And then the price band on that basis is actually defined so that one exchange may continue to have different prices for pretty long time to come. And we resolve that by sort of proposing a framework to the regulator in IPOs. And similar framework has been proposed to the regulator for the newer IBC companies, which are basically, in a sense, you are discovering their prices after a long time, after the resolution and so on and so forth. And that's where basically few companies, we have seen that happening in both the exchanges. And it's our duty to ensure that both the exchanges' prices are in sync with each other.
Okay, interesting. The other bit, and which I personally didn't think will have too much of an issue, we spoke to prominent traders, etc. They also believe there will not be an issue. But this CBDT on the derivative settlement attracting STT, and right now only with a limited set of stocks, eventually maybe the larger names as well. Market has usually found a way to deal with measures that could be seen as impacting volumes, but not impacting volumes eventually, because trade is out there all the time. You reckon that would be the case this time around as well?
Yeah, in a sense, see, we need to go to the right frameworks. And currently, if you see, the Indian markets are among the most speculative, rather the most speculative markets in the world, with almost 30 times derivatives vis-a-vis one-time equity, even larger than Korea. And that tells you that something needs to be done, and that's where I think the delivery-based derivatives and also many other slew of sort of new norms to ensure that people who do not have the skills, do not have the wherewithal, don't get involved. That doesn't mean the volumes go down or something, but basically the current issue of the delivery-based derivatives and how to apply the STT. I think yesterday there has been a resolution to that, with CBDT also being called in by the High Court, and I think it has been pretty much well resolved, so I don't see too much of any issue. And eventually all over the world, the percentage of delivery in derivatives is pretty low even otherwise, so the total impact on the STT outgo may not be that high, but there has been a clarity now, which is also in a sense through the High Court, and that is a welcome move.
Okay, how's business looking like, Ashish? I mean, I saw. I mean, if I saw how you ended the year with a 28% growth on a like-to-like basis alone, you can, by the way, remove it if you don't like it. But the 28% YOY growth is pretty comfortable for most people. How have you read into the last 2 years and not necessarily just the last 12 months or 18 months since you've been listed? And what's the trajectory looking like for the next couple of years?
See, our primary focus remains to be regulations and compliance. We are a compliance organization, right? That comes first. And if we can continue to do compliance, maintain people's trust, also regulators trust, the society's trust, then the profit will be a byproduct. That is how we see it. At the same time, we have seen that over 25 years, the volume of markets has gone up 10,000 times. Will it mean that next 25 years it will go up 10,000 times more? Probably we have run out in terms of the steam, in terms of volume growth. It may still go up a little, but it won't be like explosive growth that happened, because there were several reasons of why this happened. One is the automation part of it, standardization part of it, then derivatives, so leverage came in, additional products came in, currencies, interest rates and commodities and all, and then software-based trading, algorithm, then co-location. Each of them gave it like a 10x jump, and now you have 10,000x kind of numbers, not 10,000%, but 10,000 times, right? And we see that next 25 years may not be about trading volumes, because trading volumes are being generated, but they are not getting any profits, neither for the investors nor for the brokers, and it's creating tremendous risk on the system also. And that's where also commoditization is ensuring that the brokerages are going down and so on and so forth, and that is basically ensuring fewer brokers will remain in the long run. So we have actually gone into a different framework, saying we will convert ourselves into a more of a distribution and e-commerce framework. So we started with IPO distribution. We are very, very large compared to any other exchange in India in IPOs. We are also very, very large in bond distribution, like 3:1 type of numbers. Corporate bond distribution, we do like 3 lakh crore a year, which is larger than the entire banking system's net credit into the corporate sector over the last 2 years. Similarly, offer to buy, offer to sell, we are like 90%, 95% of the market. And these are the new markets which are not very exciting. They don't move much, so you don't talk about it. True. Brokers don't talk about it, but those are younger markets becoming very large. The last market, or the second last market we started was SME, which again has become a distribution market. It's also creating wealth for India, is a separate point. But on top of that, now the mutual fund distribution, which nobody actually cared two hoots about, is now becoming the largest for BSE. Today, we might close this month by having 3 million transactions. We have become the largest distribution framework of mutual funds in India now. Over a period, this automation is getting so many direct IFAs on BSE. Yesterday, we completed 14,000 IFAs directly on BSE. But if you take indirect, that is through our members, it could be 2 lakh people who are just distributing mutual funds on BSE platform. We are now also going with the insurance distribution. We have applied to IRDA for a JV on distribution with EBIX of US. And so we are trying to go towards becoming basically financial distribution I was about to ask you that are you setting into place different blocks and different revenue streams which could do well for the consolidated business over the course of the next decade, so to say? Absolutely. So we have started so many new revenue streams, and they are not exciting. Nobody knows about them. No analyst will talk about them because they are used to talking only the broad revenue streams they have seen over the last 20 years. True. But the next 20 years is going to be fundamentally different in our business. And that's where we are focusing on. In the older businesses, even currency, we have become undisputed leader now. In interest rates, we are pretty much there. And so even older businesses, we are gaining huge grounds. But there, you may get a lot of volumes. But because the fight is so tough, both sides lose revenues. Or we may get little revenues, although a lot of market share. But it's not getting you that kind of returns which you would want. Whereas in mutual funds, we are getting phenomenal returns. And we are growing 100-200% year on year for the last several years. And that's where I see the future of exchanges, future of distribution, especially for a developing country like India. Is that how it's evolved in some of the other global peers as well, Ashish? No, we are basically pioneers in some of this to convert ourselves into distribution powerhouse. And the world, when India became automated in 90s, the world was not automated, right? We were pioneers. Now we are taking the entire financial industry into a different direction, and we are becoming pioneers again. And thought leadership is where you need to basically move towards, and that's where what we call in blue ocean markets, the returns are actually very, very large for very little investments. And that's where we are actually seeing it as we go. So I don't want to make people very excited, but the fact is we are scoring very, very well in all this stuff. Of course, the GIFT City exchange itself is doing $900 million to $1 billion business every day. It's just the beginning. It's larger now than other older international exchanges, which are international financial services center exchanges like DGCX and all. It's now larger. And even Indian television is not even recognizing that because somehow we want to wish it away. But it's there to stay. And it is actually giving India a leg in to the international market.
Interesting. I promise you I won't make this interview about news, and I therefore will not try and eke out a couple of news bits that are floating around. But my one last question would be, should we, as somebody who speaks about markets, etc., be prepared to talk about markets for longer than what we've been used to? Until now, it's been till 3:30 p.m. or 4 p.m. Do you believe come October, we need to talk about it for longer hours?
Why not? I mean, all of us have to work hard. India has to develop further.
So it's on the anvil?
No, we have applied for that. SEBI has basically announced that from October 1, it will be till 11:55 for the derivatives, in equities too, in addition to commodities. So we applied for launching of commodities, and we have applied for the longer markets for the stock and stock futures and options and index futures and options. And hopefully, as and when the approvals come, we will be able to trade
any timelines?
Long hours. October 1.
No, but do you think the approvals will come by then?
Why not? I mean, of course, we are used to running even longer hours as an exchange in Gandhinagar GIFT City. We run 22 hours a day, right? So we are used to doing all this, and I'm sure slowly all of us will adjust, like the way we adjusted to longer trading hours in 1994-95 when automation happened, and so on and so forth.
Okay. Ashish, so good having you. Thank you so much for taking the time out and joining us in our studios. Pleasure having you.
Thank you.
And viewers, thanks for tuning into this leg of Indian Open. Up next is the F&O Show.